If you are a California home buyer, this is a video you want to watch. What is a supplemental property tax bill and why do you need to care? Okay, if you're new to the channel, I'm a mortgage lender licensed in 48 states. My team's one of the top purchase teams in America. If you want us to help you with your loan in California, because that's what we're speaking to today, reach out. We have a new number, 786-933-2077. Okay, here's the deal. So in California, when you buy a house at closing, after closing, the county is going to reassess the property taxes based on the purchase price, okay? So let's say that my calculation for what your taxes will be yearly after closing is $10,000, okay? The current owner, let's say they bought the house a zillion years ago, right? They bought it in the 80s. They bought it for $1 and an avocado sandwich. Okay, so let's say their taxes are $2,000 a year. So with you, if I have an escrow account, okay, I am collecting based off of what I think they're going to reassess the property at, okay? Here's what happens. So there's many counties in California that move like molasses. Like molasses. I'll give you an example. I had a house a couple years ago where it took a year and a half for the county to reassess the property taxes, and the owner had really low taxes. So for that year and a half, my taxes were based off of their really low amount, not the amount that it was going to be, okay? So you're like, oh, cool, Jen, you got a discount for a year and a half because they move like molasses. Guys, it's California. There's no free ride in California, ladies and gentlemen. Every state's like that, right? There's no free ride with taxes. So what happens is, even though it's their fault, it took forever, if there's a difference in the property tax amount, so let's say it took a year, and so 1 year you paid $2K, then they reassess it and they go, oh, you paid $2K, but it should have been $10. You're gonna get an $8,000 supplemental property tax bill. It's the difference between the old owners and your taxes, okay? This amount would be based on the dollar amount due between when you closed, okay? Nothing to do with pre-closing, after you close and when they reassess. Okay, so most people get this bill and they have a panic attack, and usually it's in two, you get like, they break it into two payments and they're like, oh my God, is it gonna be like this forever? No, a supplemental tax bill is a one-time hit. It's a hit for that difference between the old owner and you. Now look, there's some counties that actually reassess early so you don't end up with this headache, but that's not true for all counties. So a couple top tips. Number one, when you are buying a house in California, pay attention to what the current owner's taxes are. Pay attention to your tax bill. If you get a bill in the mail and it's at that old owner's name and amount, it's because they haven't reassessed yet. It does not mean you do not have to pay it. It's always a good idea to talk with your county property tax assessor if you're unsure. Okay, so if you're like, oh, they're just cheaper than I thought. No, they just have not reassessed yet. Okay, I can't stress it enough. So if you are not impounding for taxes, meaning that the lender's not collecting them, and your lender in your loan estimate has that taxes are $600 a month, start saving $600 a month. Okay, regardless of what you're seeing in the mail, they're gonna get their money. Start saving $600 a month. Now, if you have an escrow or impound account, it's interchangeable. Basically, that means the lender's collecting taxes on your behalf. This is what you have to watch out for. So because they move so slow in some counties, a lender can't keep extra money in the escrow account. So if we get a tax bill, right, and even if it's the old owner's tax bill after close and we know it's supposed to be more, we have to refund you the difference. Yeah, we can't override the tax bill and be like, it's California, they're just moving slow, we better hold on to this money. We have to give the money back. So if you ever get a check from your lender that says your escrow account has too much money, put it in savings. Put it there and keep it, because you're gonna need it when that supplemental tax bill comes. Now, what happens is also then your payment drops and you're like, oh, I've won the lottery. I've got a lower payment now. No, you don't. No, there's so much regulation about how much in taxes and insurance we can collect. So even if we know it's wrong, if the newest tax bill is at that low amount, even though we know it's wrong, we have to update to that. So let's say that I say you were supposed to be paying $600, this is $200, you get a bill, you get this big check back, and now it's only $200 a month. Have your taxes gone down? No, save $400 a month. They're gonna come after you for that money, so you gotta be ready for it, okay? And California is really the state that I see this in the most. I don't get the same level of drama in other states, so it's really important that you recognize this when you're buying, because one of the issues that I'll see is someone gets a check back, then the payment's lowered, and they spend the money and they get used to that new lower payment, and then they have a heart attack, you know. And back in the day, before I started doing these videos, I would get a call, even if I'd gone over this on the phone, that was like, my mortgage bill went up. What have you done to me? And it's like, it's taxes, right? If I do a 30-year fixed, I can't increase your mortgage bill. It's gonna be taxes. So really be aware of this. Pay attention to what the owner's taxes are and what the lender's saying your proposed are, and just be mindful that if there's a big difference, that supplemental property tax bill is going to come, and you want to be prepared for it instead of being terrified by it. So thank you for watching. Yes, California first-time home buyers, feel free to reach out with questions if you want us to get you pre-approved for a mortgage. But I hope this video has helped someone. And if you're looking at that supplemental tax bill right now because you worked with another lender and you're wondering, I hope this video gave you some clarity. Thank you for watching.